Joseph here from Eightcap. Welcome to this week's Trade Zone Asian session update. So we're just looking at risk markets to start with this morning. We did see the US employment data come in higher than expected. Now, this did put a worrying effect with inflation still on the radar, and it wasn't in a positive fashion. So with the Fed minutes and CPI coming up this week, that's going to be quite interesting to see what the Fed's stance is going to be. But I think everyone is still looking for it to be quite hawkish, and which will continue to possibly be negative for risk markets. So it was after a pretty solid couple of days last week for risk markets. We did see the dollar, moving lower throughout last week, but that did change, and we did see that rally get going, and then that was just basically consolidated with Friday's non-farm payroll data. So average earnings was as expected at 0.3%. We saw the payrolls coming higher than expected at 263K, and unemployment it dropped down to 3.5%. Now, the Dow, Nasdaq, and S&P all moved lower. It was not the best news for the market and for indexes. So we saw the Dow slip 2.11%. The Nasdaq dropped 3.80%. The S&P lost 2.80%. So the Nasdaq really had a bit of a tumble on Friday, and we're seeing if this momentum is going to carry forward this week with some that key data and with the Fed minutes coming out this week, which we'll get to in a moment. So we're looking for the ASX and Asian markets to start the week lower. We did see oil trade higher on Friday. Now it had a really solid session, adding well over 4%. Now this is off the back of OPEC and their proposed production cuts. This has caused a bit of a stir with the US government. They're really not happy about that because at the moment the entire world basically is trying to fight inflation with the interest rates, and with the Fed being so hawkish at the moment, it continues to damage markets, and just production cuts is going to increase the price of oil, and that's something that OPEC want to happen. But the world's trying to see lower prices for business transport and for manufacturing, and higher energy costs are not going to help that situation at all. So we can see here this very strong move from oil on Friday, and it's quite interesting now. We are seeing a real break now of this trend. So what we'd like to see now is the next pullback, how deep that pullback is, and if that does then test that previous high, and if we do see a new continuation, signaling that this is possibly a new short-term. It's a short-term trend right now, but could be turned into a short to medium-term uptrend. So this will definitely be one we'll be watching this week. Now, on the flip side of that, not so certain about USD right now. Yes, it's in an uptrend, but we like oil. We need to see a pullback and another move higher to break this high, or next high if we have a higher session today. Just a signal that we do have a short-term continuation underway, and we're going to see a new push-up to protest this high here. If we break above this area, it's definitely this trend is back underway. But until we see that, this could be a lower high that can be seen and known as a bear trap. So it'll be interesting to see what happens after that next reaction. Now, we want to just have a look at a couple of risk markets this morning. We can see the pound is slightly higher, but the euro and the Aussie dollar are lower. This is continuing from Friday's momentum. Now, the pound and the euro are in slightly better positions than the Aussie, and you can see why with moves going around 50% retracement point into the previous rally, but the Aussie has slipped below into new lows. Breaking this morning, breaking below the low we saw last month. So that's new monthly lows for the Aussie, and it's very early in the week. It's early in the day as well today, but we do have a fair bit of pretty sensitive US data coming up. So if things continue to support the dollar, we could see that the Aussie dollar continue to slip this week, and it's already sitting around just down at the 63.46 area. So if things really did accelerate for the Aussie, who knows, we could even see a slip back down to the high 61s maybe. But we'll have to see how that data goes this week. So just moving along with some of the other markets, gold this morning at the moment is trading slightly higher. We did have that move lower. One thing with gold, it has been reacting mainly to the USD, but we have seen quite a few influences on the geopolitical side, with North Korea continuing to do rocket tests. These rockets are being fired over Japan. It's not the best situation for this to be happening, but so far gold has been reacting to that in some ways, but I think primarily at the moment it is back under the influence of the US dollar. So German and European stocks slipped on Friday, and we can see following with the US leads after the non-farm payrolls. Again, we are seeing them in the areas that 50% retracement area. So we do see trend breaks. A lot could come down to how hawkish the Fed remains this week. CPI data and retail sales just is going to sort of set a tone this week for how the Fed's going to possibly going to act in the future, and if they're going to remain as hawkish as they have been, and if that's going to continue to push stocks lower. With the US 30, for instance, we are getting quite low now. That's roughly more around the 61.8% fib point. If we do see another extension lower that tests that low, any break below that point is a worry, and that could be signaling that this trend is going to be continue lower. If we do see a hold here with a new move higher, that would be a small positive on the buying side. So we'll need to get some clear signals from some of that data this week. So the data really to watch this week is coming out from midweek to the end of the week, and we have bank holidays in the US on Tuesday. There's a bank holiday today in Japan, and we have US PPI, then followed by the Fed minutes. Then we have US CPI, and we have US retail sales. So there's plenty coming out this week. We also have UK GDP as well to come out, and that could be interesting. We don't think it'll be very positive. It's not expected to come out a very strong figure either. So, but all the action really, we believe this week will be centered around that US data with CPI, retail sales, and Fed minutes and the PPI, and we're looking at that to sort of give us a clearer picture of the Fed stance, and if they're going to remain as hawkish as they have, and if they do, we feel that's going to be quite damaging for risk markets. But if there's any surprises, if they soften a touch, they could help risk markets and hurt the dollar. So we're going to continue to see that. Now we're just going to finish with crypto. Crypto remains very, very flat at this stage, and some of the coins are just stuck in very long ranges. Look at Solana, for instance. We can just see these really flat trading ranges. Something that looks like the market's really waiting for something to really give it a kick, either up or down. Bitcoin is in a similar situation. We have seen a little bit more movement, but yep, we're still in that pretty fair range. Ethereum is in exactly the same boat, and BNB had a nice rally, but it's been knocked back again. But again, and we're seeing a pretty decent trading range. But out of the top 10 here, the top 25, we do have one coin that continues to really set the pace, and that is Ripple. And we can see Ripple here, that really nice rally, and it's continued to rally. And this all comes down to what I was reading, has a lot to do with the SEC, and if they're going to potentially win the case, and that's really giving Ripple some strong guidance at the moment. So it has stalled a little bit, and we haven't really seen a test of that previous high. So if we do continue to see bullish demand, we'd like to see a test that high and possibly a break. But if we do continue to see a stall, we may see a bit of a range develop. But Ripple's definitely running its own race at the moment. So continue to keep an eye on that one during this week as well. So that's it for today's update. We hope we thank you very much for tuning in and watching, and for your time this morning. Please check out our midweek webinars with our guest speakers, and we will, as always, be running our reports during the week. And so definitely keep your eyes peeled on that key data that's coming out this week. So that should really could shape this week. So until next week, we wish you the best of trading. Thank you again, and bye for now.